Web3 TV.
What's up, guys? Welcome back to another interview at the Global Blockchain Congress in Dubai. This is day 2. I'm Adele. Today, we have a co-founder from Liquid Loans. How are you doing today?
I'm very well, thanks, Adele. Nice to meet you.
Nice to meet you as well. I would love to know more about what you're building at Liquid Loans. Can you give us a quick introduction?
Yeah, so Liquid Loans is effectively a protocol that enables you to borrow against your assets and effectively mint a stable coin. So you lock up your assets and you're minting a stable coin, and it's completely decentralized.
Love that.
Yeah.
So, and you're not monetizing on this?
No, not at all.
So what was the inspiration behind building this?
The inspiration was that we were members of a community called Pulse Chain, and we thought, you know, we were acquiring Pulse and thinking, how can we extract value without having to sell? And with my co-founder, I said, Dave, look, there's got to be a way we can do this. How can we borrow against these assets without necessarily selling them? And we thought, you know what, Liquid Loans is an option here. We can actually provide a protocol that allows, it creates a community bank. So effectively people wanting to participate can lock up their Pulse and mint a stable coin. Right. And so long as you're maintaining a certain level of collateral, then you're never at risk, and it's zero interest. And that's the other beauty of this protocol is there's no interest due on the loan, and there's no repayment schedule. It's purely maintain a collateral position.
So let's take a quick example. Say I have $1,000 worth of Bitcoin.
Yep.
Say $1,000. So how much could I take out as a loan against that $1,000?
Well, 110%. It would be, and we would argue that you would never want to be that close to the line. You know, I'd say 200% collateral would be reasonable as a starting point.
200% you can take out.
Yeah.
Okay.
Well, what I mean by that is, let's just say for argument's sake, you've locked up $1,000 worth of the token.
Yep.
You would borrow maybe $800 worth, and you'd be minting a stable coin to extract value at that level.
I see.
Yeah.
I see. And there's no payment schedules. There's no interest.
Nope.
You can pay back whenever you want.
That's right.
And it's literally just you pay back exactly what you took.
Yeah.
But of course, it depends on the...
There is a fee when you first take out.
Oh, there is a fee.
There is a fee.
There's a transaction fee.
Yeah, it's a 0.5%.
Okay.
Of the amount that you've actually locked up.
So that fee does go to you.
The fee goes to the protocol. And from the protocol, because the protocol can be used even if you're not borrowing. So there are other mechanisms. There's a staking mechanism. There is a yield-bearing token called the loan token that you can actually acquire that token and stake it in the system. And the benefit of that method is that you actually don't get paid in the loan token. You get paid in USDL, the stable coin.
And also you can sell
Ethereum.
that if you want.
Yeah, you can sell that, and also Ethereum. So if you want to acquire, or in this case it's Pulse Chain, but if you want to acquire that, it's actually easy enough to do, even if with a small amount of loan token.
Interesting.
Slowly acquire more of it.
Interesting. Since there's no leadership, since it's decentralized, how do you plan to upgrade this, or do you not?
You don't.
You don't need to.
It's completely decentralized. It's immutable. It works. It has, as of today actually, we've been operating for 700 days without any issue at all. And so the protocol's solid. And so really it's just the community needs to continue to use the protocol. And so long as the community see a need, it will have a life of its own.
And the way that you keep its price stability is the fact that as soon as they take out the loan, it automatically goes into, you say, converts to the token? Is that right?
Yeah, so what happens is if you take out a loan,
Yep.
you're getting USDL, you're minting USDL.
So that means USDL goes up, the price.
Well, USDL is a stable coin.
It's a stable coin, yes.
So generally it's...
The liquidity of the USDL goes up.
Yeah, so liquidity goes up, but it actually helps the token that you're locking up because you're taking it off market. Right? So you're not selling it. So there's no sell pressure on that token. In this case, Pulse. So there's no sell pressure. It's
No sell pressure.
And that's a good outcome for the community that actually owns that particular token.
I see.
So it's a very good way of extracting value without necessarily having to sell.
Understood.
And that's really the emphasis of what we're...
Love this, love this. Can you give us, just before we wrap up the interview, can you give us like a Web3 TV exclusive on what's to come next year in terms of the token itself, Liquid Loans, or any trend you see happening that you think is worth sharing?
Yeah, I think the biggest trend and what we're really hoping to see, and we're sort of presenting a lot, there has to be a shift in the narrative when people come into crypto. Most people come into crypto, hey, buy low, sell high, make money, make 1,000x overnight.
Yeah.
That's a nonsense, you know. And I think whilst there might be 1 in 1,000 that may be lucky,
Yeah.
that same person usually is unlucky a week later when they've speculated on something else.
Something else. Yeah.
So what we're saying is, look, not every asset, you can't apply this to every asset, but the assets that you really value, you never sell those assets. You keep accumulating, but you borrow against them, right? It's no different to saying something like, hey, if you want to buy a new car, you're going to sell your house? No, you're not. You're going to borrow against your equity to acquire what you want.
Yeah.
It's no different. Same principle, but we'd love people to come into crypto thinking, hey, I want to acquire these assets because I truly value them and I'm never going to sell them. But I will borrow against them when I need to, when I want to extract value. There is another upside. Certain jurisdictions, when you sell an asset, if you're crystallising a gain, you get taxed on it. So certainly that happens in Australia. Other jurisdictions perhaps as well. But so avoiding that is a really good thing. And the other is if you're locking up the asset and not selling it, it's actually helping the entire community because there's no sell pressure on that.
No sell pressure, and it keeps the price stability intact. Wonderful. Thank you so much for your time. I appreciate it.
Thank you. Thank you so much.
For those watching, if they're interested in finding you, where can they find you?
Liquidloans.io. There's a nice 5-minute explainer video on there. So if people want to understand that.
And are you on LinkedIn?
Yeah, we're on LinkedIn. We're on a number of platforms. We're on YouTube as well. So people can search up Liquid Loans and you'll find our channels there as well.
All right, brilliant. Thank you so much for your time. I appreciate it.
Thank you.
And all the best with Liquid Loans.
Thank you so much, Adele.
All right, and that is a wrap. Thanks so much for watching. Hope you found this insightful. We'll leave all the links in the description so you can check out liquidloans.io. Thank you again. I'm Adele, the host, and I will see you next time. Cheers.